Well, it's time now for business, beginning with a look, as ever, at the markets and firstly how things closed up in the US on Thursday. Losses across the board on Wall Street. The Dow ending just below the flat line, the S&P down a little lower than that, and the Nasdaq down almost half a percentage point, as you can see there. Now, as for the Asian markets this Friday, most indices are trading in negative territory, all of them apart from the Hang Seng, which is up almost 0.8%. The Kospi down 1%. The Nikkei in Tokyo and the Shanghai Composite trading down about 0.3% there. Well, to discuss those latest movements, we can speak now with Jamil Ahmad, Director of Investment Strategy at Naga. Jamil, thanks for speaking to us. What exactly are we seeing on the markets right now?
So essentially what we're seeing is losses across the board, no matter where you look, whether that's Europe, Asia, or the United States, with the exception of a very few indices. So generally what it is the pandemic. It's the return of the pandemic, the invisible enemy. And, those fears that it's going to create a big impact on the second wave. It's going to cause a demoralizing impact to economic sentiment and in turn economic productivity. And that's what's causing the market sell-off overall. And now what we see is there's two factors that can really prevent additional sell-offs and to provide some positive inspiration back into the markets. That's one, positive news on the vaccine, but we haven't had this in the past 1 or 2 weeks. And secondly, it is more stimulus and more governments announcing aid to help economies. But when investors only want to see government help and cash, essentially easy cash, in order to prevent further market sell-offs, that's a fear factor there, because it means investors just want to see cash. But in reality, we are seeing economic deterioration, and we're going to see a lot of more fears because the second wave fears is continuing to persist.
Now, the EU has said it's ready to extend Brexit talks. What effect is that news having on the markets?
So nobody really took that 15th of October Brexit deadline that seriously, because it was an unofficial deadline from the UK Prime Minister. But essentially, we still don't see a deal. Hopefully there will be a deal over the next 2 months. But there's still concerns over, the lack of progress, because you've got the UK chief Brexit negotiator, David Frost, was quoted as saying that, he was surprised by the stance on the EU, means there's no compromises. You've had Emmanuel Macron saying that there is also a desire for a deal, but not any price, and that was Merkel, actually. And Macron also warned that, a deal might not be possible. It's hoped, but it might not be possible. So essentially, the table tennis and the ping pong from both sides continues. Hopefully, we will see a deal eventually, but let's not hold our breaths, because we've been waiting for this for a very long time.
And Jamil, in your opinion, what should we be looking for as this week draws to a close on the market?
So there's two different events that are taking place. Firstly, we've got the economic data of the United States today, the retail sales. Now, I'll tell you exactly why the retail sales is going to be critical for the US economy, is because consumer assumption, which is basically consumer spending, accounts for 70% of the US GDP. And when you've had the recent job figures that show that there's been a plateau or maybe a fatigue in the job creation of the recovery in the US market, that's going to provide a big guidance towards where the US economy is headed in Q4. And essentially the IMF conference that is taking place, we expect to see even more chorus of a narrative that governments need to do more to help the second wave. And this is essentially going to say, look, we need more cash and we need more help for the economies. And that can present a negative tone that really what's holding the market together is only hope for cash and hope for help, rather than the reality is that, we do have a second wave of the pandemic taking place.
OK, Jamil Ahmad, we're going to have to leave it there. Jamil Ahmad, Director of Investment Strategy at Naga. Thank you. In Australia, 65 million sheep are being stripped of their fleece, keeping the wheels of the country's multi-billion-dollar wool industry turning. But this year, there aren't enough shearers to go around, a result of coronavirus border closures and strict quarantine measures. Wool growers and shearing contractors are now scrambling to keep up with the demand. Our correspondents Rochelle Harrison and Gregory Pless travelled to the Australian outback and filed this report.
Shedding their winter coats. Across Australia, the wool harvesting season is in full swing. But in this new COVID world, there's a significant shortage of shearers. Interstate and international border closures have made it almost impossible for seasonal workers to move around. The industry is missing around 500 shearers from neighbouring New Zealand, about a quarter of the regular workforce.
We've probably got 25 staff at the moment, and we really should have about 20% of our workforce this time of year comes from New Zealand. Some contractors or some regions there rely on anywhere from 30 to 70% of the workforce to come from New Zealand. So if they're lacking, that's a huge hole in the numbers.
The industry is training and upskilling the next generation of shearers and wool handlers. The new recruits will boost this iconic Australian trade, but they don't resolve the immediate shortage.
Shearing is a very particular job. It's a very hard job, and we need people who are willing to learn that skill. And I think if one thing COVID has made us realise that we need to be a little bit more self-sufficient.
Australia is the world's top wool producer, shipping the fibre to its biggest customers, China, India and Italy.
Endeavour, 6 now at 1100.
But the pandemic has hit demand for wool and prices plummeted as export orders ground to a halt. Add to that fewer shearers in the sheds and fewer sheep across Australia due to widespread drought. The result, a market that's taken a hammering.
2 at 800.
Well, it's time now to take a look at how the press is covering one of today's top stories. With the number of coronavirus cases jumping, European papers are, of course,